Good morning, everyone, and welcome back to the breakfast show with myself and Jose, and we will do the old switcheroo, voila. The old switcheroo. Hopefully, everyone is having a wonderful morning, afternoon. We're going to talk a little bit about what has happened yesterday, talking about the stocks that are going up today for obvious reasons, and then maybe a quick preview of Amazon, Apple. Figma is also going public today, but I don't think it's right at the open as always. I think probably a couple of hours later. So yeah, good morning.
Yeah, good morning, Neil. Just want to say good morning. Wait, that's you, so I don't want to say good morning to you. Good morning to Joseph. Good morning to Manuel, Terry, and everybody else joining us. Appreciate you guys joining us. Hopefully, we have a good day today. Right now, things look really nice. Yeah, Neil, I mean, we listened to the earnings call yesterday. I actually had to go and do kind of like a double take on some of these big earnings to see if I missed anything, to see if anything else got my attention. And yeah, this market's pretty exciting. I saw like Roblox, I think, was up today. They reported earnings, and not a stock we cover, but just kind of the sentiment of the market right now. Roblox reported earnings, and it's like up double digits percentage points. So a lot of excitement happening in the market. Is this something I should be worried about? I don't know. I'll have at least a few hours of enjoyment right now before I start to maybe put some worries. I'm gonna enjoy it for at least a few hours.
I mean, Roblox is one of the only ones with Nintendo, one of the only actually gaming stocks that have outperformed the market. Yeah, so it's up 18% pre-market. It's already up 112% year to date, by the way. So Roblox absolutely killing it. We do have some macro data that just came out. For those that are interested, we have some jobless claims and then whatnot. So let's quickly touch on that and then move to the companies. So U.S. continuing jobless claims rise 1.946 million versus an estimated 1.96. So a bit higher. Jobless claims rise to 218,000. Estimated number was 222, and the previous number was 217. Let's see. Q2 unemployment cost index, not that important. Okay, core PCE did rise 2.8%. Estimated number was 2.7. Previous number was 2.8, so coming in a little bit higher than expected. This is the preferred metric for Jerome Powell, although it doesn't seem like they actually care about preferred metrics nowadays. They are waiting for more data. And so right now, pre-market, Dow Jones
Wild.
up. Yeah, we're up. I mean, we're going up and up and up. NASDAQ up 1.31%. I mean, makes sense when the tech companies are going higher and higher. As for the euro dollar, 1.14 for those that are interested in that. I think Meta is still up, what, 10, 11.4. Wow. Not too bad. Not too bad. So a couple of interesting things happening. I mean, people might say that the market is stretched, but when you listen to what these companies have reported yesterday, especially the two big ones, of course, there was ARM and Qualcomm reporting as well. Maybe we'll touch a little bit on those two. But it doesn't seem like it's so stretched, right? When you listen to Microsoft and you listen to Meta and you look at their numbers.
Yeah, and the other thing, Neil, right, like you mentioned, is all these companies are talking about the innovations of AI. So if we might have, the market doesn't go up on a straight line, right? It doesn't, and there's always a stretch of maybe excitement and a stretch of maybe non-excitement. I don't know, fear or whatever, depression, whatever you want to call it. But right now in the AI space, I feel like if you look at it in the timeline, this trend is still upwards. So I'm not here going to try to time it. There might be certain stocks that we talked about in the past that maybe I might try to trim out of just because valuations on those as have been multi-baggers. Like, again, the perfect example for me was CoreWeave. Maybe some of my YOLO plays in times like this, I might start to like, you know what, maybe I'm not in the YOLO mentality anymore. Maybe I start to sell off those. So if I trim, or I saw there was a question, trim of fear, it's most likely those multi-baggers that done it really quickly. Any of those YOLO bets we have, maybe build up a better cash. But in core positions, even if we might see some dips, the long-term tailwind is still there for the AI market. I mean, it's crazy to think about, Neil, but Microsoft yesterday, I said in quarter one, just in quarter one, they expect to do $30 billion in capital expenditure. At first, I heard the first half. I was like, okay, that's not too crazy. It's not too bad. In one quarter, they're expecting to do 30 billion. Now you can multiply it by 4, and it's going to give you 120 billion. I don't think they're going to get to 120 billion in capex, as it's very fluctuant. But I believe they're going to hit 100 billion capital expenditure year. That is wild from one company, and I do believe a lot of that's going to go to AI servers. Meta Platforms yesterday, they mentioned that they're around the midpoint is somewhere around $70 billion in capex for this fiscal year. They grew about 30 billion from last year. And they mentioned that for fiscal year of 2026, they expect similar type of monetary growth. So another 30 billion, that you're telling me that now two big players are expected to have near $100 billion in capital expenditure for next year. And you want me to be a little bit worried about valuations in the short term of things? I'm like, obviously, they could be a little bit extended in the short term, but I think the long term tailwind is still pretty much intact.
I agree. I mean, we talked a little bit about that yesterday. You're going to need a lot of energy. And so we talk about all of the energy players and the infrastructure players, the Applied Digital, the Irons, and all of that. I think it's going, again, and Vertiv, of course. Vertiv reported, I think, yesterday morning. It's all of it will take time. Like you're not building out these huge infrastructures and data centers in a month or in a quarter. It's going to take a long time. I mean, I'd be surprised if you can spend $100 billion in a year. I mean that, and things like poof, we have now a new data center done. It takes time. It takes time. You have so many components, so many players that it's very difficult when you think about it. When you build a huge data center, imagine how many components and how many players are included in such a project, and every single one of them has to be on time. Like one is late, the other one will be delayed, and then if this one is delayed, then the other one is delayed, and just a domino effect. And so don't think that just because they're all saying like those huge numbers that things will just happen just like that, like super, super quick. It takes time. All of these things do take time and do take quite a lot of energy, which again, I do wonder where they're getting all of that energy from, especially in the short term.
Wow. And I think, like you mentioned, it doesn't happen over time, and sometimes the market might be expecting a lot in the short term of things, so that could create like the volatility that we were kind of just discussing. But I think understanding these earnings and understanding kind of the long term mentality of these executives and these companies is what help you protect yourself when you hear kind of like that deep seek moment. I don't think the next deep seek moment will be deep seek, but there will be a moment similar like where it's going to be like, you know what, maybe AI is not that crazy, but it's like we just heard a few quarters ago or a few months ago that this is the end. So this is the stuff that built the foundation for that long-term thesis and allow you to buy these stocks when opportunity arises. Because I mean, it sucks, but we had AMD, Nvidia, all these great companies below $100 just less than 2 months ago, but not many people except us were really discussing the opportunity here because it's just, oh no, the AI story is done. And now it's because we have that foundational opportunity to understand where these executives see that going. So right now, I definitely am being maybe a little bit more cautious with new money going into the portfolio. But I'm definitely not trimming core positions. If I'm trimming kind of those, like I mentioned, YOLO bets. I don't know if you saw Applied Digital this morning, Neil. Um, uh, Up a nice amount. But
23.
yeah. But yeah, those are just my thoughts there, Neil. There was another one. Oh, go ahead, Neil.
No, you had like one super chat from for $20, saying thank you for
Yes.
the earnings coverage. Thank you for that. Well, it's
Thank
your
you,
channel,
Eddie.
so you
Eddie
should
joined
thank
us
him.
yesterday on X.
On X, yes. With
Yeah. So
the
Eddie jumped. Make sure we get traction all over. Appreciate Eddie.
But yeah, make sure we are not pumping, because yesterday we were accused of pumping AI stocks and
Yeah.
semiconductors as if we have the power to pump up an AMD or an Nvidia.
Yeah,
Although lately maybe you might have made the case that we do have such power, but we don't.
Yeah.
We
Yeah.
don't. Those are just very, very good companies. And again, you don't need to chase. Real quick, because we do have some Roblox question right here. So Roblox, incredible quarter. First of all, incredible performance by the company
Wow.
and turnaround. Revenue up 21%, bookings up 51%, daily active users 41%. The guide is insane. I mean, what the heck happened here? Is this all Travis Kelce doing? Because I heard he had like a
Oh,
specific game launching or something like that. But these are incredible numbers for Roblox, and I believe it's close to $100 billion right now in market cap, which is quite. Ah, no, sorry. Yeah, no. Yes, wait. It pulled up Rocket Lab. I'm like, no, not the same.
I
Not
mean,
yet.
those bookings growth were insane there, Neil. I mean, revenue, we saw that yellow flag on this, and because I guess it didn't meet expectations, but for this company, bookings is probably the better
Yeah.
portion for it. And that was up 51% year over year.
And the guide for the
And
year
they
is
guided nice, yeah.
basically 35.5%
I wonder if we
growth.
start hearing about Free Fire again soon, pretty much from C Limited.
Yeah, I mean, I think they're also doing quite well. But Roblox has the advantage of being a platform. Basically, people developing their own games inside of that game, making quite a lot of money, actually. So yeah, incredible for I don't own Roblox. For everyone that is a Roblox shareholder, congratulations. I mean, this has been quite an excellent quarter for the company, and has been quite a turnaround story over the last couple of years. As for Nebius, I know I put Nebius in the thumbnail and things like that, but Nebius, I just put it there because they and CoreWeave are one of the companies that will benefit from the continued AI spending and AI growth. So Nebius is up pre-market 3.4 right now. I think CoreWeave is up 13.
Yeah.
12%. Nebius will report next week, August 7. So not today, not tomorrow, next week, August 7. We will, of course, if we're live, I don't know if it's in the morning or in the afternoon, but we'll still be here. I'll definitely cover that company. But yeah, Nebius, CoreWeave, they will benefit from the continued AI spending, AI growth story. You need such players right now to scale up quite rapidly. And if you got the best cost structure, I guess that's a good thing for Nebius.
Well, in earnings, Lam Research also reported yesterday, and yesterday was up before the earnings call, but I am seeing that the stock is down, about 8% after hours. This is one I'm actually going to take a closer look into, because let me share slides really quick.
Go ahead.
There were some interesting stuff that we saw from the top. Let's see, Lam Research. Here we go. So Lam Research, for those that are not familiar, is a company that focuses on equipment needed for semiconductor manufacturing. And the great thing about semiconductor manufacturing is that there is a lot of steps. It's not just a one-step process. Right now, there are certain steps that are maybe a little bit in more demand than others. Some may think because ASML didn't do that well that the whole market is not going to do so well. But Lam Research yesterday shared a few updates. First, they mentioned that their served market is expanding to mid 30%. They're in the low 30s right now. So they're pretty much saying that in 2025, they expect to gain market share in forms of equipment spending. The main reason is a lot of their solutions are used for those critical components that are in bottlenecks right now. Advanced packaging solutions, HBM manufacturing, right? So those are two really bottleneck processes right now in the distribution of AI chips. So not only are they growing market share, they're also focusing in markets that are in high demand right now, and they also did increase the outlook for wafer fabrication equipment spending. So originally they thought it was going to be about $100 billion. Now they expect this year to be actually closer to 105 billion. So an extra 5% growth there. So now you're adding that they're grabbing market share and the market itself is getting bigger. Outside of that, Neil, they also mentioned that in the long term of things, they believe this market, their total addressable market, can actually hit the high 30s. So they went from the low 30s. They believe this year is going to be in the mid 30s, and they believe in the upcoming years it could be the high 30s. Now, the biggest red flag, though, for here, and maybe could be one of the reasons the stock is down, I would have to look at their earnings call, but is this: the China market is still a big portion of this company's total revenue, 35%. So I guess investors are wondering, is there a pull-in happening just in case maybe there might be some export restrictions to China in the future? So are orders just coming in a little bit ahead of schedule, and is this going to create maybe a more of a headwind in the future because you're putting all these orders in? So I do think this is kind of the biggest uncertainty at the moment. I wonder if they talked about it during the earnings call. But on the top overview, it does seem pretty good for earnings, especially for the markets that they're hit. So with the stock down, this is one of those earnings I'm actually debating maybe buying into the dip if I do a little bit more research of why the dip happened.
Okay, fair enough. I mean, I also see that ASML and probably it took down the rest of the semiconductor players, equipment players. But yeah, that's going to be an interesting one to follow because they usually do report good numbers, and for some reason the stock just doesn't react accordingly. Same with Qualcomm. Qualcomm had a very good quarter actually. Qualcomm has had a very good quarter, and I'll actually wait. I have some slides already ready. Let's see where we are. Right here, I'll also touch. We'll touch on Apple and Amazon in a bit. Just going over the companies that reported yesterday. So Qualcomm, you don't have to read all of it, but they already gave us here the non-Apple revenue. So QCT non-Apple year-to-date revenues are up more than 15%. So even if we say, oh, it's down because of the issues with Apple, they're going to lose Apple. But even without Apple, they're growing more than 15% for a company that is trading at quite a low PE, even compared to their own average. So yeah, I don't know what they have to do. Maybe it's just purely because of the uncertainties of the future growth potentials, whether it's for automotive or industrial or even the AR glasses and all of that. They also made an acquisition. They closed the acquisition. But all in all, we've quickly looked at this yesterday. Automotive
What
is up.
acquisition did they close, Neil?
Alpha Wave, I think it's
AlphaWare.
called.
Okay, yeah. Oh, they closed that already. Nice. That's gonna help them in the data center market.
Yes, but you see the only problem. So I wrote it down here because they're going. This is a strategic entry into the data center market. So they're building NPU-based AI inference accelerator cards and custom system on chips for general purpose and AI head node computing solutions. The problem here is that revenue for this is only expected to begin in fiscal 28. So
Wow.
now we're Q3 fiscal 25. You'll have to wait 2.5 years to
Wow.
actually see something, which means again the market might or might not believe that this is going to happen. But this is one of the reasons. But besides that, I mean,
if I may, real quick, Neil, this is one of
yes,
those companies that is working with NVIDIA with that NVLink switch thing. When NVIDIA opened it up,
yep,
opened up the. So I wonder
networking.
if that AlphaWare products and whatever their CPU solutions are going to be used to integrate with whatever NVIDIA has at the time. So something to keep an eye out for sure, definitely. Even though it's about 2.5 years, definitely something to keep a closer eye on for.
Yeah, no, for sure. They say here the acquisition, it's Alpha Wave, by the way.
Also Wave, yeah.
Acquisition of Alpha Wave IP Group is a cornerstone of the strategy, expected to close during 2026. Alpha Wave's leading IP and data center design capabilities are key, complementing Qualcomm's existing Orion CPU and Hexagon NPU processors. This acquisition is expected to accelerate Qualcomm's data center roadmap and enable the creation of custom SoC products with leading connectivity for scaled out solutions. Qualcomm is currently in advanced discussions with a leading hyperscaler for data center solutions. So remains to be seen who that's going to be. But in the meantime, and this was a $2.4 billion acquisition, but in the meantime, you have handset that is okay, a bit slow here, up 7%, but automotive up 21%, IoT up 24%. And so there are definitely some growth drivers for Qualcomm. The company, they said the company is on track to meet its fiscal 29 target. Again, quite long term, but when you will see the number, it's quite big. So fiscal 29 target for combined automotive and IoT revenues of $22 billion. Currently, that's generating, let's call it $2.5 billion a quarter.
Times 4, yeah.
So 10 billion. Yeah,
Yeah.
so they expect to more than double that.
In less than 5 years.
Correct.
And I'm pretty sure those are conservative numbers on their end.
Which is not bad. And only for IoT and automotive. In the handset market and all of that, you have, of course, if you believe in it, the rise of AR, VR, and all of those things. Qualcomm is going to be a big player there. I think they've talked about 19 designs or partners or whatnot that they're in discussion with. So I don't know. Qualcomm, for everyone that's interested in another player that's not maybe the traditional NVIDIA, AMD, and things like that, Qualcomm at these prices, buying back shares, paying a dividend, there are definitely growth opportunities. It might not crush the market, but I think it can beat the market for the years to come.
I agree there, Neil. I think this is going to be one that is going to be pretty boring for the short term, and that short term could be a year or maybe even a little bit longer than a year. But in the long term, it has the opportunity to grow. I like this comment here from Eddie. Neil, is it possible that the need for edge AI compute is not here yet? Like I've never heard anyone say I want an AI PC or whatever they call those Copilot PCs. I think that is true. But I think if one thing that we are seeing is all these big tech players are, especially kind of like your Google and Meta, are saying that PCs are not the next AI wave. It's actually some form of new product, being your glasses or something else that's being developed. So if those markets, if that those glasses are become a huge opportunity, that Internet of Things market for Qualcomm can grow dramatically, because Qualcomm, I do believe, provides the chips for both the Google chip and definitely for Meta for their glasses, for their VR
Yeah,
glasses. They
yeah, for
provide
sure.
those solutions. I would be surprised if they're not the ones for Google either. So maybe is not looking at it in the PC, but in all these Internet of Things products. I mean, if we're going to start to add AI to robotics, when that ever takes place, Qualcomm can win. And not just robotics in the consumer space, robotics in the industrial space, right, Eddie? So I agree that maybe AI PC might not be the next big thing, but I do think there's going to be some form of AI product or things that could come out in the next 5 years that will completely shift the demand for some of the IoT products that Qualcomm has.
Yeah, and we've talked about this in the past, right? This AI PC thing, it's a marketing aspect, because let's be honest, most people just want to go and buy a new PC or laptop or whatnot because it's more powerful, because it's faster, because the battery is better. But you're not going to buy a new PC because it has that Copilot button on the keyboard. I have this Copilot button here,
Same.
right here, right in front of
I
me.
didn't even know it was there.
Never pushed it. Never pushed it. I wish I could reprogram that button to do something else, because it's as useless as it gets. So yeah, but when we talk about maybe phones, when we talk about AI, AR glasses, that's going to be much different, because you use these products in a different way, right? We use a PC in a different way, use products like a phone, a smartphone, smart glasses in different ways, and that's when things will get interesting, where AI on device is going to be important.
Yeah. Neil, I have another question here. I have a few questions. Maybe we can take a closer look in. Adam, do you think ASML is interesting at these prices, or own any? So I don't own any ASML. Neil, I don't think you own any. Do you own
No,
ASML? No.
no.
Um, I do think it's interesting. I think the long term opportunity for ASML is definitely there. Now with the Lam Research pullback, I have to look back at the pullback, but I prefer Lam Research a little bit more than ASML, because if you were here, Adam, for the quick 101 on their earnings, the Lam Research, the equipment that they do, while they're not in a monopoly like ASML, it is one of those markets that has kind of growth opportunities. We saw the advanced packaging, the HBM. They work a lot with memory players that I think Neil and I both kind of see the opportunity in the memory space. So I prefer like Lam Research. I do own Lam Research. And if these dip is some short-term headwind, then I would write it off and maybe look at Lam Research over ASML. Then Manuel here, I agree with Manuel here about restrictions. I think US is happier with putting these restrictions on ASML and not Lam Research. I agree. I think that's more likely the case, unfortunately, being kind of a monopoly player, and kind of like the only player to be able to do something. You're more likely to get restriction, because if you have competition, um, USA would be like, what's the point of putting restrictions if they can just get it from somewhere else instead? Just how we're seeing maybe with some of the AI chip stocks. Neil, let's see.
Do
There
want
might
to
be some,
touch
yeah.
maybe really quick on TransMedics, because they reported yesterday, and I've seen some comments on TransMedics, so I want to touch on that real quick. Excellent quarter. Stock is up 15.5% after the stock did pull back over the last couple of weeks. Revenue increased 37.7%. As you can see, there was that a couple of quarters ago. Remember, first time ever, I think, where revenue actually dipped quarter over quarter. But since then, it has recovered quite nicely. We're here, of course, on fiscal.ai. There is a link in our description. You'll get 15% off. So all in all, revenue up 38%. Net income $34.9 million or 92 cents per diluted share. Beats across the board for the quarter. Gross margin remains at 61%. They also raised guidance. So strength across the board for TransMedics, despite, again, I think there was the same short seller that came out and said something about the company and its flights. And there was a short seller report that came out, I think, a year and a half or so ago, crashed the stock as always. And then the stock actually did recover because the business was doing quite well. They do say here that they're raising full year 2025 revenue guidance to the range of 585 million to 605 million, representing 35% growth for the company. So TransMedics, company that is still quite small, 3.4, well, now maybe closer to $4 billion, but it has been doing quite well. As you can see, more recently, we did peak here at $141, did get a pullback, and now pre-market, we are going back up. It's a company, if you just look at the traditional pricing metrics, might not be the cheapest one, but it's a company that is still, it's growing, has been growing fast, and is still expected to grow quite rapidly, top and bottom line. So yeah, congrats to the shareholders there. I was a shareholder before, but I wanted to consolidate a little bit. And so why did I? Yeah, so basically that, wanted to consolidate. It was a small position in the portfolio, and took my gains, although I could have gained a little bit more, but took my gains and concentrated in the likes of Nebius, actually, Nebius, Micron, AMD, and all of that, things that I like to follow a little bit more than the transportation of organs. It's because of that, not because the business is bad. It's just the topic and the interest.
And a few more comments here before we kind of look into other stuff. Anthony Walker says, we don't read the comments around here. Just want to say, Anthony, I think we do.
We just read
catching
yours.
A heater.
We just read yours.
Catching a heater here, pretty cool name. Yeah, they actually do. I commented plenty of times and got a reply. These guys are awesome. Appreciate the support. Catching a heater. Neil, can you guys please cover Fubo? Is this one that you look into, Neil? Is there anything you know about this one?
It's one that is up quite significantly. I think last year or beginning of this year, I can't even remember what time it was, but I think Disney acquired a stake in that company. There was this whole fight between Fubo and the other big media players. Stock went up, then stock went down. It's more of a Jeremy stock. He follows it. I think he owns it as well. Jeremy from Financial Education. I did cover it after the Disney news. I said that the risk was off. Well, the main overhang over the company and the stock was off. So yeah, I don't know if they reported today or not, but it's an interesting play. Again, it's a streaming play, small market cap, expected to grow fast, expected to become more profitable. And so you get all of those catalysts that could push that stock higher. It's up 6%, 17% yesterday and 6% today. So, okay, they did report. They did report on Tuesday. They said that paid subscribers are now expected to exceed 1.35 million in the region. That's more than the 1.24 that they previously expected. So yeah, I guess earnings were good. Because the stock went back up, but it's not one that I follow that closely right now. Other than that, we have here some questions. Zeta is also reporting, I think, let's see, Zeta Global, also next week, August 5th. Someone also said that Tom Brady will be at their event. Yeah, but not the earnings call, just their Zeta Global event, I think later in October. He's going to be there. What are my thoughts on Zeta hiring someone from Meta? I don't know. I don't know who that guy is and what he actually did at Meta. I highly doubt he's part of the super intelligence team. Let me tell you that.
Yeah. He's probably one that's mad that didn't get the $100 million checks.
Exactly.
Yeah, there's a kind of a personal question, but I've seen James, I think, ask it a few times throughout throughout a few days. Wondering, you guys only invest in YouTube. How do you balance personal expenses? I mean, YouTube. It's funny, right? YouTube is pretty much a business. So with YouTube, you do have income coming in. There's ways that we go. We have partnerships like we see with Fiscal.ai and other partners that kind of, I mean, as a business, you're able to get customers, right? So that's pretty much in, and that's how you have kind of a form of a steady income. So the great thing about whatever you decide to pursue, you can always make a business out of everything, and that's what helps kind of pay personal expenses. So for me, it's my money invested. I'm pretty sure for Neil, it's not used for any form of daily lives. The money we put into investing is pretty much for long-term holds. So that doesn't really impact our personal expenses. And let me just say, it's not a bad life.
I agree.
Except I have to spend some time with Neil. That's the only. Just kidding.
No, but yeah, I know. I agree. It's I never thought I would be in this position when I started the channel. That's for sure. That's for sure. There were definitely some times where I thought, okay, this is never going to work out, so might as well start looking for something else. But here we are. So I guess we're doing a good job, because if we were not doing a good job, I don't think people would be listening to us.
And I'll be working somewhere else.
Exactly. I'd be selling couches.
Oh man.
Or some might say I might be playing football for Manchester United.
Yeah.
Yeah.
Let's see.
Yeah, Carvana.
Any questions you want to grab? Oh, yeah.
I mean, I know I talked about Open Door, and then there was this comparison. Open Door is the next Carvana, but Carvana killed it. It's up another 18% pre-market. This thing, yeah, crazy. They keep crushing it. So the business has definitely, obviously, turned around quite successfully. Do you want to maybe touch on the big two for tonight, an Apple and an Amazon, real quick? Or do you have something else?
I don't have. I hate on Apple too much. I don't think I can share any thoughts on Apple. When you said big two, I heard Apple, Amazon, and I'm like, which one's the second? Because I don't think. I mean, all jokes aside, for Apple, I don't know what I want to listen to. On Amazon's end, I want to continue to see that cloud growth, right? I mean, we've heard from already Google, we've heard from Microsoft that the cloud market is growing at strong levels. Is Amazon seeing the same thing? If it's not seeing the same thing, then I can unfortunately say that maybe the stock might see a dip, because the market is going to perceive the growth from Microsoft and Google to be market share taking from Amazon. The other thing is, we did see some great numbers in advertisement spending from both Google and Meta. Are we going to see the same thing from Amazon, or are Google and Meta taking ad wallets from Amazon? So this is kind of what the sucky thing about being one of the last to reports, especially in the big behemoths, is now you have to show that you're with the trend, and if you're not with the trend, it means that the trend is eating you up. So I think you have to, and with Amazon, you already see that momentum going up. The stock is up about 2-3% right now after before the market opens. So the market is already expecting it to go good. So if it's not even good, you can kind of see a pullback. But I'm hoping we see this massive destruction of within the Max 7 of just continued growth to continue to fuel the stocks out.
Massive destruction.
Of
Amazon
massive
is
destruction
still
of
my number one.
expectations. Massive destruction of analyst expectations.
Okay. I thought massive stock. This guy wants to ruin my portfolio. But yeah, these are the expectations for Amazon for tonight. Revenue expected to come in at $162.1 billion. Quite crazy. $162.1 billion in revenue.
Mm-hmm.
EPS $1.32, although the range here is a bit bigger. Let's see a bit, what do we get for the quarter? $16.8 billion, and then free cash flow, although I highly doubt we're going to get the free cash flow. We usually get the trailing 12 months one, but free cash flow is expected to be $9.1 billion for for the quarter. Yeah, like you said, I mean, when you think about Amazon, of course, we think about AWS, I think straight away when you look at it, but most people just think about the online stores. But for example, like you said, advertising for Amazon, for example, let's put last 12 months, it's already a $58.3
That's
billion
wild.
business for them that is growing 18.5%. It's insane. This is huge. This is already a huge business, high margin business, of course, as well. Then subscription and services, same thing here. Subscription and services growing, let's call it 10%. That's a $45 billion business for Amazon over the last 12 months. Moving on to, I'm not even going to go to AWS just yet, but third-party seller services. 9.1% growth. It's a business worth $158 billion.
That's wild.
I mean, Amazon, inside of Amazon, has various businesses that would make other businesses look silly. Then you have AWS growing 18.4% and is a $111 billion business, which probably will be a bit more than that by tonight. If we look at the quarterly growth rates for AWS, we have seen it slow down, 16.9% last quarter to $29.26 billion. So let's see if we can see an acceleration in growth, although the comparisons are becoming a little bit tougher, but not by much. But yeah, I would like to see an acceleration here in growth.
I do think one of the one of the discussions with Amazon is that they were a little bit slow to investing heavily on AI chips. And it takes some time for those chips to kind of go into place and to get that market. So that's one of the reasons kind of the other players are still seeing some growth. It does seem like they are shifting that tone. I mean, I think we talked about it. We even watched that video maybe a less than a month ago of how kind of this partnership with the Amazon and NVIDIA. They also have the Project Rainer. I forget what it's called, but it's like them building that massive Trainium 2 AI chip infrastructure. So would love to hear maybe as an AI chip investor, obviously, any notion on capex growth, and I do believe we are going to get that at least from Amazon if we continue to see AWS improve.
Yeah, and this is by the way their RPO, which is primarily AWS, sits at $189 billion. Not bad, huh? Not bad at all. I think capex, spending for Amazon was the highest. I think of the big companies, I think it was already at $100 billion or so. What they
the only
mentioned
thing is
3
this
months
one
ago.
does have to expand on those distribution sensors. What do they call them? I forget the is it distribution sensors for their
it's for the whole it's for the whole business, not just for the data center. Now, unfortunately, Jose, we have to talk about Apple because Apple does report later today. So let's have a look at what the market is expecting them to do. Revenue is expected to be $89 billion, or just above it. EPS coming in at $1.43, EBIT of $25.4 billion, and free cash flow of $25.6 billion.
Pretty impressive.
Now with Apple, if we look at how they generate their revenue, of course, iPhone is the largest chunk. Then Mac. No, I think it's wearables. That's the product side. Then we're going to look at the services. So if we actually look at let's do last 2 years or so. Over the last 2 years, iPhone revenue increased 10% compounded, Mac 9%, iPad, let's call it 6%, and wearables, it's actually down 5.3% compounded. Now,
oh, wow.
Over the last 12 months, if we do the same here, where is the growth exactly?
That's wild.
It peaked in 22. It peaked 3 years ago. And since then, it has either come down or remained flat for the product's revenue for Apple.
Yeah.
But for some reason, it still gets 30 times earnings. Okay, I get it. It's the free cash flow that is still quite predictable. And you could say, okay, maybe it's because of this services being a $102 billion business for them, high margin, growing, let's call it 13%. Okay, that is great, right? Everybody paying their $2 for the iCloud storage. But
remind me of that. I got to cancel my subscription. I think I've been paying them for free.
This is why people are bullish on Apple. This is why people are bullish on Apple. They make money from people that don't even use their services. That's how good of a business Apple is. So Apple is a $3.12 trillion business, trailing PE 33 times, forward PE 29 times, and revenue is expected to grow 5% compounded for the next 2 years, EPS 7.8%. Yeah, I don't know. If you remove the buybacks for Apple, I think it's an underperformer by far.
And I think the worry is that right now it's like you have a lot of free cash flow right now, and you're able to buy back shares, and you're still growing and stuff. But if this AI market is really as crazy as it seems, that free cash flow can start to dwindle pretty quickly. And then are you still going to give it that crazy valuation for not a crazy growth story?
No. And I mean, if you look at our favorite, Google, Alphabet, trailing PE 20.9 times, forward PE 19.7, expected to grow revenue faster than Apple, expected to grow EPS faster than Apple. I just don't get it. I mean, for Apple,
Neil, maybe we can stay on fiscal. People might want to. We're getting some questions on Reddit. Maybe we can look at Reddit, even though we don't follow it. I mean, we can look at what at least the market is expecting.
Of course.
There.
In the meantime, Apple, what do you think they should say tonight in order for the market to actually react accordingly?
Positively?
Like, do you think they will? Do you think it's going to be, oh, we are working on a new suite of products that will be launched next year, AR devices, maybe having a flip phone, because Apple comes out 10 years after Android has done flip phone, Samsung's and Google? Or do you think they'll talk about AI, even though there's nothing to talk about?
Yeah, I don't know. It's a tricky one, because I do think the street now is wondering what they do with AI. Where I think maybe a year ago they were
they'll be like, we have no engineers left. We have no
we have no one. Yeah. So I do think that's a question, especially with all these Meta and all these people hiring massive amounts of AI engineers. I think the street's going to be wondering, what are you doing, Apple? And I don't know what's the next event that Apple has. Is it here? Is it around September? I think it's around September or August.
Usually.
And is that their big event where they showcase like the revolutionary next gen color?
Yeah, exactly. No, I don't know. The developer conference already happened, but the next one, should be in September. I think so. That's usually, I think, when maybe they'll mention their new colors of the iPhone that will cost $2,000.
Yeah, I've never heard a call from them, so I don't know how management speaks and what they normally say. You can move icons on the home screen, though. That's amazing. Okay, that's amazing. But yeah, I really don't know, Neil, what I would want Apple to say, because I don't think that anything revolutionary, they'll most likely use one of those events to discuss it.
I do want to give them credit on TV shows and some movies, because those are high quality. Like the TV shows that they have, pretty good, like very good actually, very good. So yeah, you wanted me to go over Reddit. So Reddit reports later today, or did they already report? Because they're up 7.8%.
Oh, did they report already? I thought it was later today.
I thought it was later today, but maybe.
I wonder if just the ad business in general from Meta.
Let's see.
Yeah, it seems later today.
Yeah,
from
it's later today. So for some reason, everything is up. So, okay. Yeah, Severance. Severance is a very good Apple TV show. Okay, so basically, market is expecting revenue 420, let's call it $26 million for the quarter. EPS of 19 cents. There's not much growth here expected, to be honest, for EPS. But for the quarter, 19 cents EPS. EBIT of 18.2 million and free cash flow of $123 million for the quarter. Let's actually have a look at how they've been doing over the last couple of quarters. I would assume that the majority comes from advertising. Correct. Yeah. So this is basically it. Advertising segment is increasing 50% compounded since March quarter of 2023. Last quarter, that increased 61%. They have seen, I think, also a rise in
was that
in
quarterly
daily.
revenue, Neil?
That is quarterly, yes.
Well, yeah, that was pretty good actually. It didn't dip too much from quarter four, and you would expect quarter four to be just like a massive. That's actually pretty nice.
Correct. Let's actually see. Global quarterly. Yeah, maybe this one is good enough. So the global quarterly average weekly active uniques, that's one heck of a metric here. So it's like a Star Wars language. We see a nice increase, here, because I do
Really
think
nice.
they've been a bit more aggressive when it comes to you having to sign in or sign up to Reddit to read certain threads and things like that. Monetization wise, we've heard reports of them maybe trying out paywalls and other things, but I think paywalls is going to be the destruction of them. Maybe AI licensing deals about their data. We've heard things about that as well. I don't know how that is evolving. Let's see actually if they mentioned something in the transcript last quarter. Yeah, so daily active users were up 31% year over year.
Nice.
To 108 million. Reddit Answers is expanding. It has already reached 1 million weekly users. International is growing quite rapidly. Ad revenue grew 83% last quarter. These are all last quarter numbers for everyone joining in. Reddit reports later today. Okay, so here they say something about the Google algorithm. While Reddit has a symbiotic relationship with Google, the company acknowledges that algorithm changes can create variability in traffic and user growth. However, Reddit believes it is in control of its own destiny and that its unique value proposition will continue to attract keyboard warriors. No, wait, what was it? To attract users and advertisers. So the Reddit has been performing quite well business-wise, and I think we talked about it when it was closer to 100, and we're like, maybe yes, maybe no. But then again, everything was quite attractive back then.
Yeah. Let's see. We do have some comments here. Some saying Apple TV is rubbish. Neil, they're going against you. Can't even get that right.
Apple TV shows are good. I don't know what Apple TV.
The Apple TV, yeah. We have Roberto here. The foundation is so good on Apple TV. We also have Yo-Yo. Severance is pretty much how it feels to work at Apple. I heard that one's a good one. Yeah, I mean, it's true. I mean, I do think that's something that Apple has really honed in, and maybe that's what they're going to focus on. Because every time I see an Apple ad on X or somewhere, it has to do with their TV shows. Who enjoys using Reddit? I actually enjoy using Reddit.
Nobody enjoys using Reddit. You go to Reddit to get information, then you get the hell out of there as soon as possible.
That's true. Yeah. After, that's true. I don't stay there. It's just for that one question that I have that I feel no one else has, and I have to add Reddit on the Google thingy to make sure I don't go on Reddit.
Jose, is this your alternative account?
It is. Nebius is killing. And we also did get another question here for Nebius that I wanted to take a look into. What does this capex increase from Meta and Microsoft mean for Nebius? I think more Neo is right. It's just the top level overview of the momentum in the AI space, that there's not enough AI compute. So other cloud service providers can definitely benefit from this growth, which in theory, Nebius could be one of those growth players. So I think it's just a good indication that demand is still there. Because Meta and Microsoft, at least Microsoft, said that they don't have enough capacity to meet demand. So if you don't have enough capacity, customers are not just going to sit idle and wait. They're going to go off and look for the next player in charge. So yeah.
Yeah, I mean, I'm excited for the Nebius report because all things indicate that they're going to try and grow even faster, and they're going to grow faster, I think, this year and in 2026. Of course, this might also mean that they might look to raise money because, I mean, although they have $2 billion, I think, in cash, these things do cost quite a lot more money. Same with Meta, right? Meta said yesterday they're going to look at co-financing options to
oh yeah, that was interesting.
Yeah, to grow, which again makes sense because if you look at the amount of cash that they need, that they want to spend, and the amount of cash that they have, it doesn't work. It doesn't work.
To me, that co-financing, I wonder how those deals are gonna work. Is it gonna be like
it's like a JP Morgan one that we read about, I think, not so long ago.
But is it just a debt buildup? A debt buildup, or is it just is it gonna be like equity share? Like you've seen some companies where they do data center build outs. We can do revenue share if 50% of this revenue from this data center you will be able to collect. So I would love to see how maybe Meta thinks about doing these.
Yeah, maybe. Figma, did you guys cover it yet? I mean, there's nothing to cover yet because it goes public later today. We did cover the S1 a while ago. It's a very interesting company. I'm not going to lie. It's a very interesting company, growing quite quickly, but it is 40 times oversubscribed. So if you think I will try and buy shares today, you can forget it. It's probably going to open up, I'd say 50, 60% higher than the initial pricing. That's my guess. That's my guess for Figma. But it's a company we'll put on the watch list and maybe cover closely because you can then start comparing a Figma and Adobe valuation wise. It's not apples to apples, but you can do apples to oranges with this one. I think that should work. Another favorite, Grab, reported yesterday or during the night, because they report in the middle of the night for me and very late for you guys. They reported stock is down 3%. So let's see. And the market is going to open in 2 minutes. Don't worry. I know. This time you're not going to get me. So revenue increased 23%. On-demand GMV increased 21%. Adjusted EBITDA was $45 million, improved by $45 million to $109 million. The key takeaways here are that GMV growth, on-demand GMV growth, accelerated to 21% year over year. So they're seeing some momentum there. The successful issuance of $1.5 billion of zero-coupon convertible notes strengthened the balance sheet and provides strategic flexibility. Some people will say this is, again, going to be the acquisition of Goto or not. Remains to be seen what happens with this one. They reaffirmed full-year guidance, so maybe the market was expecting them to raise guidance a little bit, but they reaffirmed the guidance, expecting revenue between $3.33 and $3.4 billion, so basically growing 20.5% or so at the midpoint. And so I guess all in all, a good quarter with Grab. But as I said before, Grab is not a company where you should expect it to 10x tomorrow. It's going to take a little bit of time to play out, and the market is open right now. Let's see who the movers are. Micron down another 3.6%. So I guess it follows the equipment makers in the downtrend today. Novo Nordisk down another 3%. So I'll show you the technicals again, because it does get very close to that bottom. Uber is down a little bit more. I mean, if Uber gets closer to $80, I think it's a price where I'd want to probably buy even more of Uber. Whoa. Applied Digital up 23%. Very nice. Roberto, are you here? Did you look
Yeah,
at
he is.
some? Yeah, he's here. Roberto, maybe
When are we out
start
of
looking
this one?
for the.
What are we looking for?
We added this at $9.72, I think. Roberto, start looking for some Florida homes. Meta is up 10, Reddit up 7, Nebius up 5, SoFi up 5. Oh, what do you know? SoFi up 5%. I guess
SoFi
people
up.
will
All right, this is if
people
PayPal's
will
up,
stop
I'm selling
crying.
everything.
People can stop crying now. PayPal is down, so you can start buying.
Okay.
PayPal is down, which is also crazy. 69.69 almost. Google is down 2%. 2.3%. Google is down 2.3%. What the heck?
That's a heck. That's wild.
That doesn't make any sense. Iron is up. So Iron is, again, one of those Bitcoin miners turned into potential data center energy providers. They're moving into a HPC as well. It's going to be a quarter where I listen quite closely to what they have to say. But Iron up, 4.5. It was also experiencing a little pull down over the last couple of days. But yeah, Applied Digital up 30% now. Let's pull up the other charts here real quick. Applied Digital. Yeah, I mean, we were much higher in June, but we didn't buy. We bought here, like a bunch of geniuses. Or maybe, no, we bought here. Then it went up, it went down. Now we're up 28%. Lovely stuff. Lovely stuff. This is, it's probably because of the comments that they made about the CoreWeave, the extra $4 billion. And then some extra things that they mentioned during the earnings call, which I think both of us need to have a look at. Because when we looked at it yesterday, it was up 10%, 11, and now it's up 28. So yeah, that's a good one. That's a good one. PayPal up now closer to 6%. So we're making our way back up. Basically up a nice amount, 15% or so since the bottom of that convertible stock offer, blah, blah, blah. That's up nicely. Of course, there is no stream without me showing Jose Oscar being red. It's actually green.
Nice.
It's actually green today. I think it's
and no negative sentiment.
Yeah, no negative for now.
Downgrade.
For now, United Health is down though, back under $260. Figma, what happened with Figma? Nothing. Figma is not public yet. Usually when the company goes IPO, I think they'll go IPO at noon or something like that. Lam Research down 7%, although we are seeing a little bit of buying at
we are
at the moment, a little bit, not much.
Yeah, that's one that definitely
Google being down is like
that's what I'm thinking of adding into.
Like I don't
like
I don't let me double check. Maybe there is like a DOJ decision, but I highly doubt it. Let's see. It can't be purely on the advertising strength of Meta. It just let's see. No, nothing. I see nothing. Let's check ARM real quick. ARM is down 13%. Okay, that makes a little bit more sense.
Yeah.
It makes a little bit more sense. 134 is the 200-day moving average for those wondering. Qualcomm is now down only 1.8, so there has been some buying activity since the open. That makes a lot more sense. Because I didn't I didn't understand why it was down so much. So the overreaction here, nice little recovery.
For which one, Neil?
Qualcomm.
Oh, Qualcomm. Nice.
It makes sense. I think I'll make a short video about that later. Then ASML down. Yeah, ASML. All the equipment makers are basically down. Actually, we forgot. What about Meta? Meta $775, up 11%, and then Microsoft.
Microsoft's giving some back. 5.6.
Yeah. Both of them are giving some back, which makes sense. Which makes sense. Applied Digital 34% now.
I think I might let go of this one, yo. I don't really care about long term on this one. I wouldn't mind getting some cash and maybe looking into Google.
Yeah, I mean, if we look at what we made, we bought around, let's call it here, 40%.
Yeah, I mean, like I said, for this one wasn't. I mean, I'll think about it still, but it was a small position, and now an extra few K to buy some more Google is not the worst case for me.
Yeah, I mean, 40% in what, 2 weeks or so? Not
Very
bad.
nice.
Not bad. But the thing is that they have momentum. That's the thing.
Yeah, that's the thing. It's you're having this excitement from AI right now.
They have the momentum. They have the revenue that will come in. The question is not how long, because we know it's 2026 and 25, 26 starts revenue. But yeah, you tell me, if we sell or if we stay.
Roberto said, "Shut your mouth, Jose." All right, Roberto. I'll stay in. I'm staying in with Roberto. He spoke for all of us.
If I mean, we went into this because it's a YOLO bet, so we have to ride it. We have to ride it.
Yeah.
Plus, it's not like we put in like 50K.
No, I did just I talked about it yesterday. I did sell a little bit of my Max ETF, and bought some Googs.
That's good. This is a Ferrari, so hopefully Applied Digital will make us buy Ferrari, the car, or maybe the stock, depending on which one we prefer. But yeah, it seems like they reported they're down right now. Could be an interesting one to look at. So let's do the heat map one last time, and then we will be back later today for the Amazon, Apple, or Reddit, whatever people want. So yeah, nothing much.
Oracle's up on the bullish sentiment, it seems. 1.1%.
Yeah, AMD 0.3, Nvidia 1.1. So they give back a little bit of their gains. Meta up 12. That's crazy. So yeah, all in all, pretty good at the moment. Robinhood is down 3.5.
I can't believe Micron's down 4.
Yeah, I'm telling you, the market is just too stupid. Like, they think,
especially since I saw an article. I maybe I'll look for it for the afternoon stream. But I saw Micron is taking a nice amount of market share in the HBM space. But then I also saw another article that's talking more about HBM3 supply increasing dramatically. So I guess two stories in opposite side.
Yeah, but I don't know. It's strange to me how everyone's saying, "Oh, we're going to spend more and build out more and more," and like nobody's figuring out, "Oh, they're going to need more memory." Like it's not all going to come from Samsung and SK Hynix. So yeah, I don't know.
All right.
Plus HBM4 is going to be interesting to see what happens with that next year. But anywho, we will be back later today. We will, of course, have more information on Figma, because by then Figma will be a publicly traded company. But we will be back 3:30 p.m. To cover the market close, Figma, and then Amazon and Apple and whoever reports earnings. But we're going to just cover Amazon's earnings call later today. So make sure you hit that notification bell. Don't forget, not the like button. Yes, the subscribe button, but the notification bell is more important. So hit that, and we'll see each other in a couple of hours.